Good Saturday morning, traders. I'm over here messing around with what I have discovered is an inversion breaker. It's my chart homework for the weekend. Okay. So here we have a bearish breaker. I'm not going to copy that, but you get the idea. So we had this bearish breaker. The only place to get in was this little green candle right here for a run down on this liquidity, which interestingly enough, we have a bullish breaker right here. I'm just going to keep the lines, and y'all have to realize that those lines are, I might label them, I don't know. Let's make it a little bit more purple than that. So this is our bullish breaker. The way we identify the breaker is the lowest point. We take the last up close candle when we're going down and the last down close candle when we're going up. Now, in both of those cases, we had an exhaustion wick here and one there. So those are breakers. The last up close on the way down, the last down close on the way up. So we just mark those out as the chart is unfolding. Okay, we're seeing, all we're seeing right now is this. And there was some sort of liquidity over here taken. This was actually the 50% mark of a 1 hour fair value gap was where it rejected there. So as we see, we come down, we go up a little, then we poke back down, and we start going up. We mark that out as we start going back up. So there, it's a reversal. It may just be a small one like this, like you could have marked this one as we were going down. When these things fail, that's what I'm calling the inversion. Okay. So we go up, we poke, we create a potential bearish breaker, which we touch there, and then we run down here. We actually ran this liquidity right here. Once we ran that, where do we come back to? The bullish breaker. Now that thing is holding strong. So, and there's no opportunity really to get in here. The only thing you could do to get in here was probably just put in a limit order, unless you had one sitting there. I always put mine at the top of the breaker, and it just barely missed the top. So I would have been very frustrated there. But I would probably put, if I saw that type of touch, a limit order at the round number, hoping to get filled. Once we got past it, hoping it would poke back down into it. And it probably did. If we looked at a smaller time frame, you could probably see it poking down there a couple of times, but just putting it at the round number, whatever it is this case it's 18.1, but it could be 18.2. It's just round numbers, what matters. But inversion, we've seen this multiple times. If you've seen my videos, you've seen that setup right there. And I really like I'm always being impatient and trying to get in on this portion of the move. This one did not push through with a fair value gap. That's what I like to see, is a fair value gap here. But because the market was so erratic that day, there was no fair value gap, but that was definitely a breaker. And you can validate it by watching it touch again. So if you miss this run, don't chase. It will come back to you if it is a valid breaker. So this breaker occurred at 12:26. We came back to revisit almost an hour later at 1:21. So you would have to sit there and wait and watch and be very, very patient. Maybe even have your limit order just sitting down here. But it can sometimes violate. If it's taking liquidity like it took this high, I might not have taken that trade until after it. I don't think I would have put a limit order there. I would have been waiting to see what happened when it got there. But the inversion is what I'm talking about. So we're focusing on this portion right here. So we did an exhaustion wick, took some liquidity up above, And here we're coming back down. We validate it. We push back right there. That's the only place we really pushed back. If you were going to be a real aggressive type of entry, you could sell short right there and aim for this liquidity here or down to here. And you would have made some good money because this was a very high volume. I mean, this thing moved just from right there. That's 280. Even at that first run of liquidity, that's 136. So 150 points, that's $300 on one micro. So we come down, we respect our breaker, and this little section right here is what I'm looking at. Okay, so this is an inversion. We're going to call it an inverting the bearish breaker in this situation. We get up and we kind of dance around inside of it, but then finally we poke through it. But we don't take this sell side yet. I mean, this buy side liquidity right here yet. We leave it. And then we come back down and we touch the top of that breaker several times. See that? Never do break into it. Candle body's respecting. So you could get in on a long right on the top of that breaker. And then you could put your take profit right there. Just from there to there, that's 370. And that's 500. So there's 130 points right there, $260 one micro. We come back down. We respect the halfway point with bodies. And then we keep going up and up and up. So that it inverted this bearish breaker, made it an inversion breaker, I guess you would say. I've heard of ICT talking about inversion fair value gaps. So if we were looking at it as an inversion fair value gap, this would be our fair value gap as we push through, validating this breaker. And you could look at it like that. We came down, we touched the fair value gap there. We came down, candle bodies respected the halfway point, and we're off to the races. So you could look at it. I think using them in conjunction would be the best validation, not just using one, but both. So we didn't have that down here. The only thing we could do here you could do an inversion fair value gap right here. Look at this. And this one's a bearish. We'll just leave the color the same. So you could use an inversion fair value gap here. Since we didn't have one on this side, you could use that one as our fair value gap that we're revisiting. Even though it's already been well painted, we could still use it as a validation. Okay. Most of the time when we have the breaker, we also have a fair value gap right next to it, either to the downside or the upside. So you could use that as a secondary invalidation. And you can see the candle bodies respected the top of that inversion fair value gap. So in both cases, here the candle bodies respected the breaker. When it came back down, they respected the midway point of the fair value gap that formed over here. But it too is an inversion fair value gap. So it can get really confusing when you start looking at everything as an inversion or a possible, like if this was a bullish fair value gap to the upside and coming back down to it, that's the way you would normally go. But when you start looking at inversions, things can get really confusing. What thing are we inverting here? So I would encourage you to keep it real simple. But I have noticed that this pattern happened a lot. When we validate that breaker, I see candle patterns like this very, very frequently. So it's worth taking a look at as you're marking out your charts. Don't anticipate it. Wait for validation like this. That's my chart homework for the weekend. I'm going to go through here and I'm just going to mark out breakers like I normally do. And I'm really looking into this just a normal breaker. How many times does it come back and revisit this area? That's what I'm really looking into, because this is often the opportunity. I mean, you can make money here, but it's choppy, it's scary. You look at that. It's going up, but it's going to make you sweat. It's one of those where you'd be up $100, down $100, up $100, down $100. So you're just taking little base hits, and this is the big move right here. So I'm wanting to research how many times this happens, and I also want to see how many times this happens. That's my homework for myself for the weekend. I would encourage you to do something similar. Hope that information helps you. Next week, we're going to be better traders. Learn a little bit each week. I sure could have benefited from a personal daily loss limit on Friday because I went on tilt, no doubt. I didn't think I was on tilt, but even all day yesterday, I didn't think I was on tilt. But as I woke up this morning with a well-rested mind, I was definitely on tilt. So I put in a personal daily loss limit to lock my account once I get down a certain amount. And I also put it trailing. So if I'm up $500 and I drop $100 off of that, it's locking my account and I can't trade anymore for the day. And I'm going to be mad when it happens. But clearly, I need the help. Preserving my profit will be far better than allowing it to slip away. And I had that in place before, and I thought of it as a weakness, so I took it off. I was like, you know what? I've grown enough. I can do this on my own. I don't need no personal daily loss limit. Plus, anytime you start a new account, whether it be a combine or an XFA or any of that, it resets all that stuff. You have to go in and reset everything, and it won't hold your parameters. And so you have to actually go in there each time and do it. And so that was part of the problem. But also I was thinking, you know what? I've grown enough. I don't need it anymore. Well, nothing could have been further from the truth. I still need it. Those tools are there for a reason. It's not a me problem. It's an industry issue. So use those tools to prevent you from eroding your P&L. If you notice from this screen, you can't even see your P&L. So you can get in a big jam real fast and not even realize it. And I often times trade from this screen using limit orders. So, you can get upside down real quick and not even know that you've made that many mistakes. So, personal daily loss limits, inversion breakers, plus our regular breakers. I'm just going through doing chart homework. I'm going to be screenshotting this and putting it into my slideshow, my Google slideshow, so I can review it. I like to do that in the mornings before I start trading, so I know what a good setup looks like. And I know if I'm patient, we're going to get a revisit of this breaker. If it's truly a breaker, we will get a revisit and it will be respected. And that's our higher probability trade, even higher than this one. This is our high probability right here, the retouch. But watching it go up against you, saying, I knew it, and then missing out on that whole opportunity, because this is, lunchtime macro, you'll really, sometimes you'll kick yourself. But if you're patient, this right here, that's the holy grail, because we got a straight run, and it's a fast run from here to there. That's 38 minutes. From here, that's 12:30 to here, that's 33 minutes. And you got all this chop in between, all your P&L going away. Here you get in at the round number, you immediately, which you may want to take profit there, I don't know, but you immediately get a run up. So if you got in at that round number, that's 100. So there's 200. Get out at the top of that green candle, or even round number there, 300. So that's 200 points, $400 on one micro, just like that. You're out. You don't have to be nervous anymore. You don't have to sweat it. Maybe you buy two here. You make $800 on two micros. You sell one there and you leave one on as a runner, hoping you get up here. That's another 200 points, another $400. So there's 800 plus 400. And you don't have to sweat it because you already made your profit right here. Just an idea. That's my chart homework. Marking out these breakers, seeing how the candles perform, learning to spot them in real time. Personal daily loss limits. I can't express the importance of that until you have complete control of all your faculties all the time. I've noticed Fridays are my day. Fridays are my day to go on tilt. I don't know why it is, but I'm considering not trading on Friday just because every single week I'll do well all the way up until sometimes it hits Friday, Thursday, but more times than not, it's Friday. Friday, I blow it up. Part of learning psychology, part of learning trading is learning yourself. I think that's the biggest part. You can learn these patterns. But if you're in here trying to catch a trade and all this chop, that's not the pattern. That's not your trading plan. That's you. So you learn yourself. You learn what your pitfalls are. And then so like mine, I just learned, I'm learning. And I mentioned it before, but for some reason on Friday, I forget that I suck on Friday. And I keep on trying to trade, and I oftentimes lose a whole lot more money than I would ever lose on Monday, Tuesday, Wednesday. It's just not a big deal. I don't know if I don't want to go into the weekend down. On any other day, I can cut my losses, close it out for the day, and no problem. But on Friday, for some reason, I want to get that money back. And I keep trying and trying and trying until I'm so far in the hole that I have a terrible weekend to think about it. I got all this time off to sit and mull over my mistakes. So that's my goal this next week, is not to mess up on Friday. Remember to be kind to yourself and be kind to one another. Until next time, trade well.